In today's news, a sharp market sell-off has sent shockwaves through the cryptocurrency landscape. Meanwhile, significant regulatory milestones are shaping the future of digital assets. Stay tuned as we explore the 10 most impactful stories from around the globe. Here are today's top 10 stories you need to know. Cross-chain bridges have recently experienced a massive shift, with $7.2 billion migrating to the cross-chain interoperability protocol. This surge highlights a significant trend in liquidity migration within the cryptocurrency ecosystem, as investors seek better opportunities across diverse networks. Cross-chain technology facilitates communication between different blockchains, enhancing transaction efficiency and user experience. As more assets flow through these bridges, the potential for improved interoperability among various blockchain networks becomes increasingly apparent. This development paves the way for greater collaboration and innovation, allowing decentralized applications to thrive. However, the success of cross-chain technology hinges on its ability to address existing challenges, such as security vulnerabilities and fragmentation. Looking ahead, the industry must prioritize solutions that foster seamless interactions between networks to fully realize the potential of this transformative technology. In a surprising development, Coinbase's Chief Legal Officer, Grewal, has stepped down from his executive role but will remain in an advisory capacity. This leadership change comes at a critical time as the cryptocurrency exchange grapples with an increasingly complex regulatory landscape that has intensified in recent months. Grewal's departure may signal a shift in Coinbase's legal strategy, particularly as the company strives to adapt to evolving regulations both in the US and internationally. As one of the largest cryptocurrency exchanges, Coinbase's legal decisions could set important precedents within the industry. Stakeholders are left uncertain about how this change might affect the company's operations and compliance initiatives. Looking ahead, Coinbase must navigate potential challenges while leveraging new opportunities to refine its legal framework and ensure sustained growth in a rapidly changing market. JP Morgan analysts have raised significant concerns regarding the risks associated with blockchain adoption. They contend that the primary threat does not stem from hedge funds or institutional investors, but rather from the widespread implementation of blockchain technology that fails to deliver tangible benefits for public chains and tokens. This scrutiny comes as the blockchain industry matures, emphasizing the critical need for projects to exhibit real-world applications and clear value propositions. The commentary from JP Morgan underscores a pivotal moment in the blockchain landscape, where sustainability and utility are paramount for success. As various projects vie for attention and resources, those that can effectively address practical challenges are likely to thrive. Conversely, initiatives lacking substantive benefits may struggle to survive. Looking ahead, the blockchain sector must prioritize innovation that meets societal needs, ensuring that only the most viable projects emerge as leaders in this rapidly evolving technological space. Canada is currently considering the introduction of new regulations surrounding stablecoins, with the aim of modernizing payment systems. This initiative follows a growing recognition of stablecoins as a vital component in bridging traditional finance and the burgeoning digital economy. Scotiabank recently emphasized the necessity for a regulatory framework that not only encourages innovation, but also safeguards the integrity of financial markets. As stablecoins gain traction for their potential to enhance transaction efficiency and lower costs, the Canadian government is evaluating the implications of their widespread use. This regulatory endeavor could establish clearer guidelines, enhancing consumer protection and fostering market stability. Moreover, Canada's proactive stance may inspire other countries to adopt similar frameworks, promoting a global dialogue on digital currency regulation. As discussions progress, stakeholders are keenly observing how these potential regulations will shape the future of stablecoins in Canada. With the right balance, Canada could emerge as a leader in the responsible integration of digital assets into the financial landscape. Recent reports indicate a concerning trend of institutional outflows from cryptocurrency funds. Spot Bitcoin funds recorded losses of approximately $95 million, while Ether funds saw a decline of $52 million. This shift follows market turbulence triggered by the Bank of Japan's hawkish comments, which have heightened global economic uncertainty. Institutional investors, who previously viewed cryptocurrencies as a hedge against inflation, are now adopting a cautious stance. This downturn marks a significant reversal from earlier trends, where institutional flows were considered a bright spot in the crypto market. The current sentiment reflects a growing apprehension among investors, leading to a short-term bearish outlook. Analysts suggest that despite these withdrawals, Bitcoin's long-term value proposition remains intact, driven by its scarcity and increasing adoption. The critical question now is whether institutional investors will return to the market as conditions stabilize. As regulatory clarity improves and macroeconomic factors evolve, renewed interest from institutions could reignite momentum in the cryptocurrency sector. In a bid to boost its cryptocurrency market, Japan has proposed a significant tax reform aimed at reducing the tax burden on digital asset profits. The proposed uniform tax rate of 20% categorizes profits under a separate taxation framework, contrasting with the current rates that can exceed 55%. This initiative is seen as a strategic move to stimulate Bitcoin trading and attract investment in the country's digital asset ecosystem. Japan has long been recognized as a key player in the global crypto landscape, having embraced blockchain technology early on. This reform could further enhance its competitive position against other countries, particularly as regulatory environments shift worldwide. The proposed changes reflect a broader trend among nations seeking to create more favorable conditions for cryptocurrency transactions, with countries like South Korea and Singapore also considering similar reforms. If implemented, Japan's new tax structure could invigorate its struggling crypto market, potentially leading to increased innovation and economic growth in the sector. Analysts predict that this move could catalyze a resurgence of interest in digital assets within Japan, setting the stage for a more vibrant crypto economy. On July 10th, North Carolina passed a groundbreaking bill that clarifies the Commodity Futures Trading Commission's authority over prediction markets. This legislation is pivotal as it establishes a framework for federal oversight in the rapidly evolving cryptocurrency and digital assets sector. With the explosion of interest in these markets, regulation has become increasingly urgent to protect investors and maintain market integrity. Polymarket, a prominent player in the prediction market space, has filed applications to offer regulated margin trading in the United States, demonstrating a proactive approach to compliance. This development highlights the growing acceptance of prediction markets as legitimate investment vehicles, which could attract more institutional investors. As states grapple with the complexities of digital asset regulation, North Carolina's legislation may serve as a model for other jurisdictions seeking to create clear guidelines. The implications of this bill could lead to a more structured and secure environment for prediction markets across the U.S. In the coming months, we may witness a wave of similar legislative initiatives aimed at fostering innovation while ensuring consumer protection. Europol has announced a monumental enforcement action, seizing $1.51 billion in assets linked to CryptoMixer, a notorious Bitcoin mixing service. This operation dismantled the platform, a tool often used by ransomware groups to obscure the origins of illicit funds. Authorities confiscated servers and approximately $29 million in Bitcoin, marking a significant victory in the fight against cybercrime. Crypto mixing services like CryptoMixer have long posed challenges for law enforcement, facilitating money laundering and other criminal activities. As regulators worldwide tighten their grip on these services, this operation may set a legal precedent for future enforcement efforts. The seizure highlights the growing collaboration between international law enforcement agencies in combating digital crime. The ramifications are likely to resonate throughout the cryptocurrency ecosystem, prompting other mixers to reconsider their operations amid increasing scrutiny. This crackdown could lead to a more transparent environment for cryptocurrency transactions, but it may also push criminals to seek even more sophisticated methods of obfuscation. Moving forward, The industry must adapt to these changes, and it remains to be seen how privacy-focused cryptocurrency services will evolve in response to heightened regulatory pressures. Ripple has received a significant regulatory approval from Singapore's financial regulator, enabling the company to expand its services related to XRP and RUSD. This development allows Ripple to provide innovative token-based settlement and payment solutions specifically designed for banks and fintech firms operating in Singapore. The approval marks a pivotal moment in Ripple's strategy to strengthen its foothold in Asia, a region that has become increasingly vital for cryptocurrency adoption. Singapore, recognized as a regional financial hub, has been proactive in fostering a regulatory environment conducive to blockchain technology and digital assets. This expansion not only benefits Ripple, but also sets a precedent for other cryptocurrency firms seeking to enter the Singaporean market. The implications of this approval are profound, as it may encourage similar initiatives in neighboring countries, potentially accelerating the overall acceptance of cryptocurrencies in the region. As the global regulatory landscape for digital currencies evolves, Singapore's progressive stance could influence other jurisdictions to adopt more favorable regulations. In light of this, Ripple's success in Singapore may serve as a blueprint for other firms aiming to navigate complex regulatory hurdles, ultimately shaping the future of financial transactions in Asia and beyond. In a startling turn of events, Bitcoin experienced a significant drop of 5.7%, trading around $58,586. This decline was triggered by hawkish comments from the Bank of Japan, which raised concerns about tightening monetary policy in a global context where interest rates have already been a hot topic. As investors reacted to these comments, Ethereum also faced a decline, contributing to an overall negative sentiment in the cryptocurrency market. The broader CoinDesk 20 index fell nearly 6%, indicating widespread distress across various digital assets. Altcoins were not spared from this volatility. Polkadot plummeted 11%, breaking a critical support level that many traders viewed as essential for future stability. The meme coin sector witnessed extreme fluctuations, with notable drops in Cashcat and Lab, further exacerbating the uncertainty. Spot Bitcoin funds saw outflows of approximately $95 million, while Ether funds lost $52 million, reversing previous positive trends that had offered some hope for recovery. Despite these tumultuous shifts, the global cryptocurrency market cap still sits at $2.19 trillion, reflecting a slight increase amidst the chaos. Analysts are now left pondering the implications of these developments on future market dynamics. As we look ahead, the pressing question remains: will markets stabilize, or are we entering a prolonged downturn that could redefine investor strategies? Thank you for watching our roundup of today's most significant stories. Which story shocked you the most? Don't forget to like and subscribe for more updates on world news.